Hey guys, what's up? It's Aaron with the Jameson team at Likely Real Estate here. Last time we talked, we were just ending the second quarter for the year, and now we're almost halfway through the third quarter of the year, getting ready for the wind down before Christmas. And we are towards the end of the summer. Uh, School is on the horizon. Parents and families are getting ready to buckle down for another school year. And so I thought it was a great time to talk about a market update. Last time we chatted, we really were in a time of big change that we haven't seen for a few years in the real estate market, especially in Florida. And what we were seeing was instead of the craziness from the pandemic and onwards, we were seeing sort of a return to a more normal and healthy market where a home does sit for an average of 30 days before it is sold. And that is okay, that is normal, and it's a sign of a good and healthy market. We also saw buyers start to, get back a little bit more control and a little bit more power. I remember putting in offers that were, over ask, waiving all contingencies. Now it's nice to, put in some offers where I just put one in this past couple weeks ago where we got through the inspection report. We made a good offer, a little bit above asking price. And we were in the inspection, and there were a couple issues that came up, issues that were important to my buyer. Issues like leaky pipes, old pipes, stuff like that. Which during the pandemic, during this crazy real estate market that we had, making a repair request like that, honestly, was pretty risky, and not oftentimes would sellers go for it. But here, where we were back in a normal market where there's a lot more options for buyers and sellers are they have less leverage than they used to, then we're starting to see stuff like reasonable repair requests being met. Not saying that that wasn't the case beforehand. Yes, you could make repair requests, but I'm saying more so now than before is it becoming more common. And honestly, I think that's a good place to be. I think it's nice when it balances out between the sellers and the buyers. So I'm sure you guys are watching the news now that we are heading into August. What is the news saying about the real estate market? Well, the housing market is in a bubble, and the bubble is about to crash. It's about to be like 2008 all over again. We are in economic turmoil. We need to run for safety. We need to start buying up cans of food. You need to build a nuclear bunker because the end, Armageddon, is coming. And if you aren't ready, I guess you're a goner. That's the message that the media is giving us. That's the message that we're seeing all across the world. And what it does is it puts fear into people. And I'm here to say that, it's okay, take a breather. Let's look at the basic facts of the housing market over the past, say, 30 years. And let's talk about what the trends are showing us. So, is this like 2007 and 2008 when we saw one of the worst housing market crashes in the history of the world? Let me share my screen real quick to go over that. Okay, hopefully you guys can see my screen. So, this first slide I have up is the supply of homes in terms of a month supply. So 2007, 2008, we got 9 month, 8.9, 9 month supply, and a 10-month supply, 9 month supply again, and a 9 month supply again. Um, that's a lot of inventory to be on the market. And when inventory is super high, I mean, we all learned this in school. When inventory is high and demand is low, well, that's when prices tend to drop drastically. That is not the case that we are seeing today. In fact, inventory is still at a record low number, as opposed to a normal market like all the other years we have. There's still less inventory than there usually is, and so with that lower inventory, demand is still outweighs inventory, which means home prices are not going to race to the bottom. And it is our job not to freak out when our home doesn't sell in a weekend. We need to look back at the numbers, look back at the value, and we need to know what our home is worth, and we need to not freak out when it doesn't sell if we know that we priced it correctly. So yeah, we have a 2 to 3 month supply right now. That is okay. That is normal. Nothing to freak out about. Very different than 2007, 2008, and that's what I'm trying to show you guys in this slide. Is we have less than half of a month's supply compared to what they had then. They had a lot of inventory. All right, next slide I want to go to is this one. So a key reason that the housing market crashed in 2007, 2008 is that the lending standards were out of control. They were able to give loans to people with no verifiable income, really low credit scores, stuff that wouldn't necessarily fly today was flying then. And so everybody was able to get a loan, and that's not always a good thing. And hence, we saw, I think this is the wrong slide. Okay. So, given that, the government and lenders have done a lot, and this is a question for your lender. If you want more information on this, I can definitely put you in touch with some people that will break this down perfectly. But needless to say, lending standards being out of control is not the reason that the housing market is starting to slow down right now. And it is not an indicator of a crash today whatsoever. I hope this graph helps you guys with that and looking at that. All right, next thing is finally, the reason that homes really did crash is because a lot of people weren't able to pay their mortgage, and the default rates shot up in 2007, 2008, 2009, and onwards. That is not the case right now. In fact, foreclosures are once again at an all-time low, and since they are remaining low, we do not have to worry about that at all. So I say all that to kind of go over with you guys that the housing market today is not where it was in 2007, 2008. This is not an indicator of a great big crash, and it is still a good time to buy a home. Granted, interest rates are higher, and you are going to want to refinance down the road. But if you are someone, and I've said this before, if you are someone who is renting, if you are someone who really wants to, just buy a home to live in it, to move on to the next stage of life or move on to another stage of life, maybe you're in a home and you're thinking of downsizing, it is still a great time. I would say that anybody looking to buy a home to stay into it for 5 to 10 years, still a great time to buy. You will still be able to sell your home when prices continue to go up, honestly. And you'll be able to cash out on that investment. But buy a home because you want to live there. And what really is a home? It's a place that you're going to live. You're going to want to raise a family. You're going to want to settle down. You're going to want to enjoy. You're going to want to host people. You're going to want to be able to entertain. And most of all, you're not going to want to be paying rent. And that is great when you can take on ownership and not have to pay rent anymore. And instead, you're able to pay your mortgage, which still oftentimes is less than what you would pay in rent. Final graph I want to show you guys is, I really hope this shares as it wasn't earlier. Okay, let's see if it does. Okay, are you guys able to see this? I hope so. This graph shows the median home values from 1993 to 2022 actually. This gray area here shows periods of great economic downfall, economic turmoil. This one being the most notable, the Great Recession. And I just point all this out to say, when you look at this graph, during these periods of great economic hardship, great economic confusion, economic downfall, home prices actually were not affected, and home value was not affected, except for the Great Recession of 2008, and that was basically caused because of the housing market crashing. But over the past 6 recessions, we have not seen housing market affected like it was in 2008, and it's actually when you see inflation go up, uh, buying a house is a great way to combat that because okay, you have a 30-year mortgage, you're locked in 2022. Say you pay that mortgage off for the full 30 years, 2050. What do you think um, rent's going to be in 2050 with the inflation continuing and just the whole world changing and everything? Probably a lot more. If you look at rent prices 30 years ago, they were significantly lower than they are now. And I say that to say that once you get that fixed rate mortgage, you are locked in at that price for 30 years. Unless you decide to sell or move or do something else or refinance, you are locked in. You do not have to worry about your landlord coming along and being like, hey, we're going to hike the rent this year. We can do it. Prices are going up. We can do that. That is not something you have to worry about with home ownership. So inflation does play a factor in your dollar value, but in terms of your mortgage changing, you do not have to worry about that at all, which is really, really awesome. And so I just wanted to show you guys that graph that in a period of economic turmoil is not necessarily a time to worry about your home dropping in value. And even if it does for a few months, for a little while, it'll go back up. Historically, the month of July and June has always been a time of less people buying homes. A lot of people are getting ready for school. Same thing with Christmas. You'll notice December 24th, nobody wants to go and look at a house, not even me. Is that because the housing market is crashing? No, it's not. It's because we are enjoying the holiday. So it's a good time for us to fact check ourselves and just be rational throughout this period and just look at the facts and ask ourselves, is this as bad as everyone is making it out to be, or is this just a normal part of life and a normal part of cycles? um Hope that made sense, and hope to see you guys in a few more months with another video like this. Look forward to chit chatting with you guys in the comments or anywhere. Anyhow, that's me signing off. Take care. Peace.